Hey, happy Monday, everybody. If you're thinking about buying a home or if you're working with buyers, this is an important week to understand what is happening with interest rates and, more importantly, what it means to you. So let's start with where interest rates are at today. So we have VA and FHA both sitting at 5.375, conventional strong 5.99, jumbo 5.875. Keep in mind, these are shown with up to a point, great credit, jumbo conventional 25% down. Now, what's actually driving rates last week and this week? Because we're getting mixed signals from the economy. Retail sales came in stronger than expected, which tells us, by the way, that people are still spending. Job data is still solid, which means the economy is holding up. But at the same time, higher rates are slowing certain areas down. So what does this mean? It means the market doesn't have a clear direction right now on what's happening. And when this happens, rates tend to move up and down within a range is what we're seeing. And here's something to think about. Isn't it crazy how when the stock market does well, your 401k does well, but rates tend to go up at the same time? Rarely do we have it both ways. A strong economy is great for investment, but it usually puts pressure on interest rates. On top of that, oil prices have come down, which has definitely helped inflation and generally overall good for rates. But the stock market is strong. Mortgage bonds are sitting at a key level, so it's really at a decision point here. Now, this week is a big one. Tuesday, we get home price data and jobs data. Wednesday, we get mortgage applications and the Fed meeting. Thursday is a big day with inflation data and GDP, or gross domestic product. And Friday, we get more jobs data. Two things I really want you to pay attention to here. First of all, mortgage applications on Wednesday. This tells us how many people are out there actively looking to buy. It's a good way to measure demand. Are buyers stepping back in or are they waiting? Second, the Fed meeting. This is a big one. Even if they don't change rates, what they say about inflation and the economy can move the market quickly. We're going to be paying attention to the Fed's tone, which is really important to as much as their decision. Now, as a buyer, what does this mean? A lot of people are waiting for the for rates to drop, and that might be you. But just remember, if that's you, there are a lot of yous out there. And what happens when a lot of yous all decide to come back in the market at the same time because rates drop? Just think about that. What happens? That puts upward pressure on prices. What you should really be focused on is this. Can you comfortably afford today's payment? And are you shopping in the right price range for your household? Rates are cyclical. They're going to go up, they're going to go down. Giving it enough time, rates will come down again. And when they do, you'll be in a great position to refinance. But waiting for rates to drop before buying is a sequence that has historically cost people money. They end up paying more for the home and missing out on equity because they're waiting. For agents, this is where you can really lead and shine. Buyers are hearing a lot of noise right now. Your job is to bring clarity and help them focus on what actually really matters. Monthly payment, long-term strategy, and how to win in today's market. From a strategy standpoint, we are still in a range with rates. There's some risk of rates moving higher depending on this week's data. So we want to be leading this week a little bit cautious. If you're in the market right now, it is a good time to be paying attention and have a plan. If you're thinking about buying, even if it's a few months out or a year, let's put a strategy together. No pressure, no commitment, just a clear plan on what you need to do and how to improve your situation. If you're thinking about refinancing, remember, it's time to have that target rate. What a target rate is, it's a rate that if you missed, you would regret. Because let's face it, we all want the lowest interest rate, but we don't know when rates hit the bottom, because when they do and they shoot back up, you don't get any warning and you're not going to be able to lock in time. So having that target rate in place will be a rate that if we hit it, we're going to lock you and ensure that you're going to save money. All right, you guys, that's my Monday update. Hope you had a great weekend. Let's have a great week. And if you have any questions or you want to talk about buying a home, I'm your guy and would definitely love to have a strategy session with you. Take care.